Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. The headlines we're tracking for you tonight. After 10 months, inflation falls below the RBI's target of 6%. Consumer price index in November is at 5.88%. Food prices fall below 5%. Vegetable prices contract 8%. Even as inflation brings cheer, the growth engines sputter. Industrial production in October contracts 4% to hit the lowest level in 26 months. Manufacturing growth contracts 5.6%. The government refuses to release the RBI's report on why it breached the inflation target for 9 months in a row, says the provisions of the RBI Act and regulations do not provide for making the report public. Dalmia Bharat acquires cement, clinker and power plant from JP Associates for 5,600 crores. The Dalmia Bharat stock rises in trade as the deal adds cement capacity of more than 9 million metric tons per annum. Chaos across airports in India due to long queues and delayed security check-ins. Aviation Minister Jyotiraditya Scindia visits the Delhi airport to take stock, says the number of entry gates have been increased and more steps are being taken to reduce crowds. Air India's long-haul flights delayed by several hours, adding to the chaos at airports. The company says some North American flights were delayed due to slower than expected issuance of airport entry passes. The union government tells Parliament it's not considering any proposal to restore the old pension scheme, tells opposition ruled states who have refused to adopt the new pension scheme it cannot return the accumulated corpus as there is no provision under current laws. Nandan Nilekani backs the government's decision to withdraw the data protection bill after 2 years of deliberation, says the bill was getting bulkier and needed to be more thoughtful. Also hints that the central bank's digital currency will not hurt the growth prospects of UPI. That's an exclusive. The Supreme Court lashes out at the union government with the delay in payment of 4,500 crore arbitral award to Reliance Infra in the Delhi Metro case. The court warns that it will take a very serious view in case of non-compliance and sets December 14th as the deadline. After a historic victory for the BJP, Bhupinder Patel takes oath as the Chief Minister of Gujarat for the second time. 16 other ministers also sworn in at a high-profile ceremony with Prime Minister Modi and BJP Chief Ministers in attendance. After a botched first attempt, Twitter launches its paid verification feature. Twitter Blue will be available for $8 a month, but if you're paying using the Twitter app on an Apple device, it will cost you $11. Well, straight to the top story tonight. After 10 months, inflation has dropped below the RBI's threshold of 6%. There's been a sharp fall in food prices, especially vegetables, which has taken the consumer price index to 5.88% for the month of November. Food inflation is now below 5% and vegetable prices have contracted by more than 8%. Many economists now believe that inflation could hit 5% in a couple of months if the current trend persists. While the fall in inflation brings much-needed cheer for the economy, the growth engines seem to be sputtering. Industrial production in October is contracted by 4%, much to the surprise of economists and market watchers. Now, this is the slowest pace of growth in 26 months. Lata joins us now with a wrap of the inflation and the IIP data. On inflation cheer, on IIP disappointment, Lata.
On a day when the government says it will not reveal the contents of the letter that the Reserve Bank has written explaining why it could not bring inflation below 6%, the best of news hits the Reserve Bank. Inflation for the month of November is indeed below 6% after 11 long months, coming in at 5.88. But the better news, as you point out, is that it has come in way below street expectations. Street expectations were running between 6.3 and 6.4%. The biggest surprise is coming in food inflation. People were expecting food inflation at about, 5.5, 5.8%. It's come in at 4.6, and there's a steep fall in vegetable prices and, of course, edible oils, fruit, and even pulses to some extent. So this combined impact of several food items has brought down the overall inflation level. The negative in the inflation number is the core inflation. Core inflation are largely services, education, health, transport. This is not falling, and it is very difficult because these can't be imported. That, as the Reserve Bank pointed out in its previous policy, has become very sticky, coming in at 6.2 for November, way above the Reserve Bank target, of course, of 4% for overall inflation. The Reserve Bank is worried that core will remain at 6, and that's why it sounded hawkish in the previous policy. So looks like that hawkishness will continue. But the headline inflation falling is very important, and the bond markets are bound to react very positively to this when they start trading. The negative number also comes from the index of industrial production, which is for the previous month, October, coming in at -4%. It's a serious indicator of weakness in manufacturing. Manufacturing has come in at -5.6 for October. Consumer goods, both durables and non-durables, are -13, -14%. So clearly, growth is under threat, but inflation is under control.
Well, yes, Lata, as you were pointing out, certainly relief coming in from the Reserve Bank on a day when the RBI's inflation report that you were alluding to, the government telling Parliament that the Reserve Bank, which had written a report to the government to explain why inflation breached its 6% target for 9 straight months in a row. The RBI governor had said previously that it is up to the government to release the report. The government has now decided not to make the report public. But what does this mean, in the larger context of transparency under the inflation targeting regime? Would it not have been better, Lata, for the government, in fact, to put out the report for public consumption?
Well, basically, it's passed up an opportunity for public debate on something which is of interest to the entire economy. That's the impact. And just a word on background, as you said, the MPC's mandate was to keep it between 2 and 6%. And if you fail for 9 months, then this is what the law says. When RBI fails to meet, it shall send a report to government on 1, why it failed, 2, remedial actions proposed to be taken, 3, an estimate of the time period within which inflation shall be brought back within, the target shall be achieved. Now, nowhere in the law does it prohibit or mandate the government to make it public or the RBI. So the government has merely taken cover under the fact that it has not been wantonly mandated to make it public. But it does not prohibit either. So it's really a choice the government has made. And I would submit that it is an unfortunate choice, because we would have known by when RBI expects the target of 4%. We would have known, what steps they will take to reach there. This is something the economy needs to know and needs to debate. At least in this case, it is very obvious what the letter would contain. They could not achieve the target because of COVID and a whole host of supply constraints. But if inflation targeting is going to become an institution, we need more sunlight on it so that it becomes a healthy institution. So I would submit that it is a little unfortunate that the government has chosen not to reveal the letter.
Well, the government has in fact chosen not to make that report public. Lata, many thanks for joining us on both of those big stories. On to the market action of the day, a range-bound session which saw the markets end the day flat. The Sensex slipping 51 points. The Nifty ended only a point higher at 18,497. The broader markets outperformed the blue chips, with the mid-cap index ending with gains of 0.5%. Meanwhile, the rupee ended the day weak at 82.53 versus the dollar. There was heavy selling pressure in the domestic market and a strong dollar that weighed on investor sentiment. Foreign fund outflows and rising crude oil prices in the international market also impacted the rupee's behavior today. However, Finance Minister Nirmala Sitharaman telling Parliament that the rupee has been strong against every other currency.
Indian rupee has been strong against every currency, and that is proved, and I can read the records. As regards just the US dollar, because the US dollar, because of the policies adopted by the US Fed, is getting stronger and stronger. That has been explained. Now, as regards the foreign exchange reserve, Reserve Bank has used foreign exchange reserve that it has to intervene in the market only to make sure that the dollar and rupee fluctuation doesn't go too much.
Well, that's the Finance Minister. On the rupee in Parliament, oil prices falling as weakening global demand offsets concerns stemming from the shutdown of a key pipeline supplying to US and Russia. Russian President Putin has already threatened to cut production in retaliation for a Western price cap on Russia's exports. It's also offered India help in overcoming the oil price cap. In fact, the government is likely to ease the windfall profit tax on oil and gas companies at its next review meeting. The next review scheduled for the 15th of December. Sources say the fall in crude oil prices and diesel cracks could provide more elbow room. The big corporate story tonight, Dalmia Bharat has announced that it will acquire cement, clinker and power plants from JP Associates for over 5,600 crore rupees. The stock soaring 3% on the back of this announcement. Nigel standing by to explain the deal contours and why this is a big positive for Dalmia Bharat. Nigel, tell us why this makes sense for Dalmia Bharat.
Well, towards the final half hour of trade, Dalmia Bharat was a stock in focus as they went ahead and they successfully got the cement business from the JP Group. Almost all of it has been got by them. From JP Associates, they've got closer around 9.4 million tons odd, and it's backed by good clinker capacity of around 6.7 million tons. In addition to that, they're also getting a thermal power plant of around 280 megawatts. So it's an integrated unit that they're getting for around 5,600 crores odd. This is good news. Remember, these assets have exposure predominantly to central India. They also went on to say that JP Power, well, they were housing the 2 million ton grinding unit. That's a Nigri unit at Madhya Pradesh. So they backed that as well for around 250 crores, but that's not integrated. This is good news for Dalmia Bharat because you're getting closer to around 10 million tons at an EV per ton of roughly around $73 per ton. That's a discount to what Dalmia Bharat is trading at as of now, and it's at a discount in comparison to replacement costs as well. To set up a new cement plant, well, you'll have to pay $90 to around $100 per ton. So you're getting this at the mid-70s, which is a discount. Point number one. Point number two is it is an integrated unit. It's backed by clinker. You also have power that's coming with it. And it's giving them access into a new market. That's a central India with a straightaway capacity of close to around 10% market share out there. So that's good news. And finally, Dalmia Bharat has been talking about increasing its capacity from around 37 million tons to around 75 million tons. Now, this is a good 10 million tons that's come in there, and it helps them to get on its way to going ahead and doubling capacity by 2027. All in all, good news for Dalmia Bharat.
I just pray and hope कि अब चीजें कुछ सुधरेंगी क्योंकि मेरे जैसे कई लोग होंगे किसी मेडिकल इमरजेंसी भी हो सकती है. I request ministry to take at least proper action against this authority.
We have 16 gates at the departure end here, and this becomes a choke point in many manners. Only 14 gates were for passengers and 2 were for crew and specially abled. We have now increased that to 16 gates for passengers and an additional 2 for crew and specially abled.
Chaos at airports across the country as air travellers continue to feel the pain. Delhi has seen serpentine queues, delayed check-ins and long waiting hours days after the aviation minister first chaired a meeting with airport officials to take stock of complaints of congestion at Indian airports. In fact, the minister today visited the Delhi airport to take stock of the situation. He was seen interacting with airport officials and security personnel. Scindia told Network 18 that the number of entry gates have been increased and more steps are being taken to reduce congestion. So what is causing the chaos at India's airports? Well, for starters, air traffic in Indian airports is now nearing pre-pandemic levels. Pan-India air traffic touched 4 lakh yesterday. Delhi airport on an average handles around 1.9 lakh passengers and about 1,200 flights daily. Now, this has taken a toll on the CISF staff, which is responsible for airport security check-ins. They've already highlighted a crunch in manpower. A quick check of the latest passenger load factor. All major airlines currently operating at over 90%, which means there are barely any empty seats on any flights. But as per the winter schedule, there are fewer flights that are taking to the skies now compared to the pre-COVID year of 2019. So this is interesting. The number of flight departures per week is now nearly 22,000. In 2019, that number was well above 23,000. So we have lesser flights departing from major airports like Delhi versus 2019. So what's adding to the stress and chaos? Could it be inadequate manpower? In fact, Delhi airport officials have told the Indian Express that they have 5,000 CISF staffers, and that number hasn't seen an increase since 2017. Delhi airport authorities have presented an action plan to Minister Scindia. It includes digital display boards which show the waiting time, crowd managers and ushers to guide travellers, real-time updates on social media, among others. Meanwhile, separately, Air India's long-haul flights have been delayed by several hours over the weekend, adding to the chaos at airports. The Delhi-Toronto flight on Friday night, for example, was delayed by 9 hours, according to Flight Radar. This flight has been regularly delayed this month. Air India has regretted the inconvenience caused to passengers and said that some of its North American flights were delayed due to slower-than-expected issuance of airport entry passes. Here's our colleague Pallavi Ghosh speaking with the Aviation Minister Jyotiraditya Scindia at the Delhi airport.
I had taken a meeting last week to make sure that we ease off the congestion at our airports. I've made a physical visit today. These are not steps that have been announced by government alone. I have taken close to a 2-hour meeting with all stakeholders in the aviation ecosystem, be it CISF, be it BCAS, be it DGCA, be it the airport operator, which is DIAL, be it all the airlines together. And we've actually done a full process study in terms of where the bottlenecks are occurring. How do we ease up those bottlenecks? In summary, succinctly to put it across to you, we have 16 gates at the departure end here. And this becomes a choke point in many manners. Only 14 gates were for passengers and 2 were for crew and specially abled. We have now increased that to 16 gates for passengers and an additional 2 for crew and specially abled. I've also mandated that we need to be able to put up boards across every gate that talks about the wait time at every single gate. And therefore, if I'm a passenger and I get off maybe at gate 1, but I see that gate 8 has a less wait time, I will proceed to gate 8 and enter the airport from there. I've also told the airport operator to make sure that we have usherers in place.
Well, that is the Civil Aviation Minister. Let's hope that there is some improvement or it is going to continue to be harrowing for passengers. But, you know, there is going to be no sort of silver bullet here. So one must temper expectations on how much and what can change on the ground, considering the fact that there is a significant manpower crunch, or so it seems to be. Now, the union government has told Parliament it is not considering any proposal to restore the old pension scheme. It has told opposition-ruled states who have refused to adopt the new pension scheme that it cannot return the accumulated corpus as there is no provision under the current law. Sapna joins us now with the details. Sapna, take us through the government's position in Parliament on this issue, and where does this leave this debate?
Well, surely the union is very much clear on the fact that, they don't really have a role to play as such on, states entering into NPS. I think there was enough clarity on that front. And here on their part, they're extremely clear that there is no question of going back, and, the reasons there are extremely obvious. There has been a massive debate on it before NPS was rolled out. In fact, that continued for a long period of time, and states themselves took a lot of time to come into the system, right from 2004 to 2010. So it's pretty much a done deal. Plus, there are massive fiscal implications. If you have some of the states going back to the OPS, there can be massive fiscal implications. And, there is an advisory all around, or there is an intent both by, by various institutions, by Reserve Bank of India, by Finance Commission, by GOI, by Finance Ministry, by various experts, that fiscal consolidation or fiscal prudence is very much required. So keeping all of that in mind doesn't really make sense, for this reversion. Of course, unless, some of those states will go back to OPS, maybe making some fiscal savings, at least in the initial years, because of the way OPS is structured. Maybe that could be one of the reasons. But overall, it's not very productive, so to speak. This is what experts and officials tell, across the board. This could also have some implications for center-state relations. There's a lot of central assistance that is taken by states. Sounds that if you look at their budgets, they don't really have too much of resources to, spend in terms of capex. And there has been a lot of emphasis on capex as well in the last 2 odd years by the center and to an extent by the states as well. So all of that, becomes a bit of a question mark, to so to speak, at some point in time. Also, let's be very clear that why this, why the fact that this money cannot be returned, simply because, states can enter voluntarily into NPS, but when they exit, they are not the parties. The contract is between the NPS trust and the pensioner. So even if the corpus has to be recalled by some of the states because they want to revert to OPS, that is not feasible.
News coming in tonight, reports suggesting that army officials had a face-off with the Chinese troops at the line of actual control in Arunachal Pradesh's Tawang sector. Sources add that this face-off led to minor injuries to a few personnel from both sides. Both sides immediately disengaged from the area. This is the first reported incident of clashes between both forces since the May 2020 clash in Galwan, where 20 Indian soldiers lost their lives. We have asked the Indian Army for a comment. So far, no comment has come in. Time for us to head into a short break, but up next, the Supreme Court lashes out at the union government for a delay in the payment of 4,500 crore rupee arbitral award to Reliance Infra. In the Delhi Metro case, the court sets a 48-hour deadline. That and more when we return. Well, the key architect of the Digital India mission, Nandan Nilekani, believes the government did the right thing by withdrawing the data protection bill after 2 years of deliberations. In an exclusive conversation with CNBC-TV18's Ritu Singh, Nilekani said the bill was getting bulkier and needed to be simplified. He also hinted that the central bank digital currency will not hurt the growth prospects of UPI. Speaking about the health of the startup ecosystem, Nilekani said the funding wilter will cleanse the sector.
Well, I think finally it's about solving challenges and giving benefits to people. So UPI has given that benefit of zero cost instant payments. And, but I think there is the anonymity benefit of CBDC. And I think over time, as people start using this, they will figure out more use cases, both on the retail side as well as on the wholesale side. Fundamentally, we have to realize that the RBI is one of the most progressive and forward-looking regulators there has been.
We're proud as a nation to be the third largest country when it comes to number of startups. We have more than 100 unicorns, but they've raised capital in what has been a tough environment now, and we're seeing mass layoffs, restructurings, shutdowns in worst cases. How do you think the scenario is going to play out from here?
Well, I think in some sense this is going to cleanse the system, because if somebody doesn't have a very viable business model and has essentially depended upon a lot of capital to build, that's no longer valid. But I think it will force companies to become much sharper focused, much more frugal in their approach, more focused on solving real business issues. And I think at the end of this, we'll have a very good set of robust, healthy companies. So I think this will lead to a good outcome. No, I think they have done the right thing, because the earlier draft, because there's so many suggestions, it had become bulkier and bulkier, and it had so many clauses. And I think they decided, rather than take that, they said, let's take that learning, come back with a much more succinct and much more thoughtful version, which they have done. And once you have this law, then you can pass additional laws and additional regulations. But you have the basic framework. So I think this is the right approach.
And you can catch the entire conversation with Nandan Nilekani, Non-Executive Chairman at Infosys, at 9:30 p.m. right here on CNBC-TV18. Now, even as Nilekani backs the new data privacy draft, calling it more succinct and thoughtful, 5 former information commissioners have sounded alarm bells over portions of the draft data protection bill, which they believe will dilute the Right to Information Act. The draft bill proposes an amendment that bars the release of any personal information about public servants or elected leaders, including their assets, service records, or disciplinary action initiated. Take a look.
So once you have this section removed, apparently the fight against corruption will slow down. And that is a very, very important thing. Secondly, it says that it will override any other act. Now, if it overrides the Right to Information Act, then it's going to be a serious problem. So I think on these 2 counts, the agitators are rightly agitated, and especially activists of the RTI.
The Supreme Court has lashed out at the union government for a delay in the payment of 4,500 crore rupee arbitral award to Reliance Infra in the Delhi Metro case. The court has warned it will take a very serious view in case of non-compliance and has set December 14th at the deadline. Ashmit joins us now with more. Ashmit.
Well, let's keep in mind that it was in 2017 when a Reliance Infra subsidiary had won an arbitral award of nearly 7,000 crore rupees against DMRC. Now, DMRC so far has only paid 2,500 crore rupees, and a huge balance of 4,500 crore rupees continues to remain, is yet to be paid, and that is the concern that was raised today by Reliance Infra before the Apex Court. They argued, Harish Salve appearing for Reliance Infra argued that in May of this year, the Supreme Court had upheld this arbitral award, and despite that, there has been not even any payment coming from the centre. Not just that, but not even a payment timeline has been offered by the centre or by DMRC going forward. In fact, he went on to argue that there should either be a timeline given by the MD on a formal undertaking before the Apex Court, or somebody, quote-unquote, should go to jail. Those were the words coming in from Harish Salve. Now, what's important is that the Apex Court sympathized with this view and, in fact, took exception to the conduct of the centre, said that centre has been given enough time. This is an arbitral award that has been litigated over the last 5 years. That Supreme Court has had the final word, has given clarity that it's time now for the centre to cough up, and that it's appalling that the centre, on one hand, continues to bat for India to be an arbitration hub, but yet refuses to honour these arbitration awards, and towards that end has given a warning that within 2 days' time, the centre will have to come back with some form of guidance on the way forward, short of which the Apex Court will be compelled to take a serious view on the subject. So therefore, this matter will get taken up day after tomorrow, and that's when more clarity is expected from the Attorney General.
Ashmit, many thanks for joining us. Let's take a look at the headlines from the startup space. Arundhati Ramanan joins us now with a wrap-up. Aru.
Thank you so much for that, Shireen. Here are the top stories from the startup world. PharmEasy begins layoffs amid the funding crunch and mounting losses. The move comes after the e-pharmacy unicorn delayed its IPO and failed to raise funds even at a valuation cut. The number of employees sacked remains unknown. Now, in what's a first for an Asian sports person, Indian cricketer Shikhar Dhawan sets up a $75 million global venture capital fund to back startups across the spectrum of sports, including gaming, esports, Web3, and more. Angel investor Network Fund gets SEBI approval to launch a 300 crore rupees fund to back early-stage startups across health tech, agri-tech, and more. An early investor in Blue Smart Fund Network has backed over 60 startups. After a failed rollout last month, Twitter relaunches its subscription service for the blue tick badge, but iPhone users will have to pay more. Meanwhile, Elon Musk confirms he may increase tweet character limit from 280 to 4,000. Now, the Minister of State for Finance, Pankaj Chaudhary, has told Parliament that the Central Board of Indirect Taxes is probing alleged tax invasion to the tune of 23,000 crore rupees by online gaming companies. All this alleged tax evasion is between April 2019 to November 2022. Separately, Enforcement Directorate is also investigating several cases related to cyber and crypto asset frauds amounting to over 10,000 crore rupees within online gaming. And with that, it's back to you.
All right, Arun, many thanks for joining us. That's the startup snapshot for tonight. NASA's Orion capsule has successfully returned to Earth after a historic 25-day journey around the moon. The mission was the first of those under the Artemis program, under which NASA aims to re-establish a human presence on the moon for the first time since the last Apollo mission in 1972. And with that, it is time for us to wrap up this edition of India Business Hour. From all of us here, goodbye. Many thanks for watching. Stay tuned. The news continues on CNBC-TV18.